Welcome to Diamond's Edge Live. My name is Greg Diamond, and this week we are on The Correction is Over Watch. As I'll explain, we're going to look at a variety of different daily charts, weekly charts, and essentially what I'm looking for is either today, this week, heading into the end of March, I'm looking for setups that are telling me that this volatility that we've seen going back from December of last year, some stocks even well before that, that this correction that we've seen is likely over. Okay, so let's jump into it. I'm going to share my screen here, and first let me start with the. I'll start with the S&P 500, kind of a bigger time frame. Okay, on the daily chart. All right, so if we go back and important update or important thing to know if you're just joining or you haven't seen anything from what I do, you can go back to the very first episode. I kind of covered the basics. So if after this show or anytime you want to see that first recording, I think that's important. I talk about the everything technical and how my strategy works. So important thing there. But all right, let's just start from that August low. This is back in 2024. Okay, and you can see here I've labeled this as a 1, 2, 3, and now we've had this corrective move. The side, yeah, we've had sort of a breakout, but it's a false breakout. Now we're having this false breakdown. Okay, so within the rules of Elliott Wave, there are 5 waves up, there are 3 wave corrections. Okay, so just from this August low, you can see how I've marked on this chart on the S&P 500. We've had this 3, and now really since December, we've had this sideways to again up, false breakout, false breakdowns. And right here, this is where it gets important. I have this labeled as a wave 4. Okay, if you've been a subscriber of mine for a while, or even if you're just new, or maybe even if you're not and you're familiar with the rules of Elliott Wave, wave 4s tend to be very tricky. They can be long and complex. It can be short and volatile. Okay, this one looks to be rather long and complex. So what we have to do is look at different scenarios where this wave 4 could end. I think that we are nearing that now. Also important to note that not all stocks and indexes or sectors are going to bottom and top around the same time. All right. However, we can put those clues together and then formulate a plan, have good risk to reward ratio where to me it favors being long rather than short. All right. So if we're looking at this wave 4, first you can see this red line is a 200-day moving average. That is a very basic technical indicator. Long-term averages. You'll see big pension funds, you'll see big asset managers start to buy around the 200-day moving average. Paul Tudor Jones, famously said that he won't even look at anything. He's a famous hedge fund trader. He won't even look at a stock if it's below its 200-day moving average. Okay, so you can see here, that is being tested. Okay, it doesn't mean it has to hit exactly, or it could hit slightly below. Around that 200-day moving average is important. Okay, that's one indicator that tells me that we're close. Let's look at the RSI. Not extreme oversold conditions. Okay, but it's close. And the same. And what we can see here is the composite index is actually starting to slope up with these new lows in price. All right, something else to keep in mind. I mentioned in that first episode we looked at, or maybe it was the second episode, but Fibonacci retracements. Okay, I can come over here and look at a Fibonacci retracement from the recent highs. Okay, all the way down to that August low, and you can see it's kind of hard to see, but this green line is the 38.2% Fibonacci retracement level. Right, that hit yesterday and into today. Wave 4s tend to stop around the 38.2% retracement level. Now, again, similar to the 200-day moving average, it doesn't have to be perfect. All right. You can also see here, there's this swing low back in November, right before the election. Maybe we get a drop into that, to the end of this week. We have the Federal Reserve minutes coming out in about an hour. The jobs numbers on Friday. This could cause some volatility. But what I'm looking at here is, again, a completion of this correction. So the theme here is to buy weakness. And if we look at that, even if we step outside the technical box, we look at the CNN fear index, it hit a low of 17 or 16 this week. So, there's a lot of fear, and these create these lows. Okay. If you look at sentiment just across, tariffs, inflation, there's a lot of fear out there. That's where be the contrarian. And I highlighted this to 10 stock trader subscribers in my weekly market outlook on Monday, that this fear is actually where you want to be a contrarian trader and buy it. Okay. So we've been buying weakness. We've been buying, we bought the dip on Friday. We bought a little bit more yesterday in a different market. And so this is my game plan, really through all of March, possibly April. I'll get in some of those scenarios in a bit, all right? But this is what I'm looking at. You can see here we're rallying, all right? Let me switch over to the Nasdaq, and this is the Nasdaq futures chart. I highlighted this to 10 stock trader subscribers this morning, okay? And this was something that I was looking for, all right? If we go back to the top here, this swing high in, call it mid-late February, we had this big drop. And now just from here, okay, you can see how it's kind of channeling nicely with these trend lines, all right? So what I was looking for, and I'll zoom in here, is what's known as an ending diagonal, all right? And an ending diagonal is a diagonal pattern, all right? But it had this overlapping wave to it, this overlapping pattern to it. And you can see I've outlined it here. 1, 2, 3, we got this 4. Now you can see in blue, I was looking for this might look something like this instead, okay? Where, we rally up here into today or Friday, and then we drop, but the point here is that what these big drops and big rallies are doing is it's getting into oversold levels, but it's also creating this environment where, people are trying to short, they're trying to short, but the market's not actually breaking. We're not having this, crash-like effect, okay? That creates, again, more people, or more of a buying opportunity in my view. All right. So that's the short-term outlook, at least, in the Nasdaq futures over the next couple of days. But if we pair that again with what's happening on the bigger picture, all right, this tells me that we're very close to a low. All right. Let me look at the total stock market. Okay. So we look at individual sectors. We looked at the Nasdaq. We can look at the S&P 500. Let's look at the Vanguard total stock market. And this is basically all the stocks within the U.S. Okay, so it includes everything. Now look what we have. I love looking for different clues across different sectors, across different stocks, to let me know, okay, am I seeing a wave 4 like characteristic in everything that we're looking at? And you can see here on the total stock market, it's nearly the same as that S&P that we looked at, right? So we can see the wave 4, we can see the 200-day moving average, okay? So this, again, is telling me that we could have this set up where we're close to completion. Now, what would it look like if, if this week isn't necessarily the low, or we have, a little bit more volatility? We can absolutely see that, all right? So let's say we get one more drop, okay, and then we can rally into mid-March, and then we get a low, one more slight low into the end of March, and then we take off. That would be something that would be on my radar as well. I'm not concerned with, especially with these wave 4s when they're tricky, with catching the exact, low and expecting that to hold. We can see a lower low here in the VTI. We could see a higher low in various other stocks and indexes. But the key is I'm buying this weakness, I'm buying this fear. Okay, so that's a scenario to think about heading into March, or for the rest of this month, rather. Okay, we can also look at the total world stock market, which this includes everything. Okay, this is where it looks a little bit different, right? We're not seeing this low below here. Okay, below what is that? That's the January 13th, right? The VTI and SPX, they're down here. Nasdaq is down here. Well, the total world stock market is actually holding in pretty well, okay? So this is where we actually see positive divergence within the total world stock market, right? And again, you can kind of see here where this would be a very tricky wave 4, all right, where we would have something like this. Again, heading into the end of March, possibly April, okay? Let's say we test, we get a bounce, and it looks something like that. Maybe we do get a low into the end of April, and I'll get into that when the time comes. It's a slight possibility, but even still, it still goes with the overall characteristics of a wave four. Okay, and then we pop higher, all right, into the summer months. So that's again, S&P, VTI, now the VT. You can see how these things start to come together. You can see how these clues start to come together. Um, Now let's switch gears and let's look at the Dow Jones Industrial Average. I was looking at this over the weekend, and this really caught my eye. So I tell 10 stock trader subscribers all the time, and this is true if you are, an Elliott Wave practitioner, and you'll look at just the S&P or you'll look at just the Dow. When I look at when I look at the Nasdaq, I don't just look at the Nasdaq 100. I look at the Nasdaq 100. I look at the Nasdaq Composite Index. I look at the Spider Technology sector, ticker XLK, and then I'll dial down into Amazon, Apple, Microsoft, Google. Okay, but what's important about here with the Dow, all right, is that we had this double top. Okay, so you can see the 200-day hasn't hit yet. All right. But keep this in mind real quick. All right. Now let me show you just like I look at the NASDAQ 100 and NASDAQ Composite Index and then the XLK, I also like to look at the Industrial Select Spider XLI relative to the Dow. All right. Now look at here. So this has actually hit the 200-day moving average. But what I want to show you, and here I have this wave 4 on here. Okay. So it didn't make that double top like the Dow, but it's also starting to drop into that 200-day moving average. Now, this is very corrective to me. Corrective meaning, this isn't an impulse wave move down. I don't think we're going to have this crash, right, as it stands right now. I think this is a corrective move off of a larger bull market that we've seen really since the lows in 2022, some in 2023. So you can see how this divergence between the Dow and the XLI is starting to take shape for me. And I said, all right, and maybe we get, if I zoom in here, similar to what I outlined in VT and VTI and the S&P. Okay, maybe we get a drop, okay, into the end of this week, maybe next week. Then we get another bounce, and then but it's still getting into those oversold conditions without breaking down. All right, all it's going to take is one positive catalyst, and I don't know what that would be. Maybe it's earnings. Okay, if we get a lot of those at the end of April, that would be something where the market starts to take off. So within the XLI or within the industrials, all right, we covered Caterpillar over the last couple of days. I want to go back to that because as the Dow and XLI go, Caterpillar is in them, and it's going to be important. So look what we had here. Okay, we were looking at this. This looks like an ABC corrective move, obviously very sharp. Okay, but look what's happening here on the RSI and the composite index. Caterpillar is high on my radar, and I haven't traded in a while, but it's high on my radar because of what I'm seeing both on this daily chart and in the weekly chart, which I'll get to, where we have extreme oversold conditions in CAT. And look, you can see how we had this big drop yesterday, completely reversed. Okay. This is on my radar. We have extreme RSI and the extreme oversold levels on the RSI. Now look at what the composite index is doing, okay? And this is something that I highlight to 10 stock trader subscribers a lot. When you see the RSI drop and then you see the composite index diverge, that's also telling me that there's a low coming into play. So then we combine that with the overall bigger picture, okay? And the risk reward, as I mentioned at the start, to me favors being long here rather than short. All right, let's look at the weekly chart of Caterpillar. And this is really, I find this really fascinating from a weekly wave count, from a weekly perspective. And you can see here, all right, I've got I have a lot of Elliott Wave numbers on here, okay? But essentially, and I'll just go over these real quick. I won't label all of them, but this whole move from the COVID low, all right, was a 1, 2, and then we're counting out all these different moves here, all right? But again, what I want to focus on here is just on this weekly, okay? Look at how this RSI, or excuse me, the composite index is actually making a positive reversal. What do I mean by a positive reversal? And let me highlight this up here, okay? So when I see the composite index make a higher low relative to price on the same 2 points, so I'll highlight this here, okay? So this is back to January. Okay, this made a lower low in price, right? But it made a higher low in the composite index. This is a very bullish sign. Okay, now you can also see on this weekly, and the week's not over yet. But let's say this, gets up and ends the week higher. This would be what's called a hammer bottom, and I don't get too crazy with some of the candlestick pattern names, but this is something that that I'll be looking for on a weekly time frame. You can kind of see one here going back to 2023 that marked a low. You can go back and try to look for them. Again, I don't get too crazy with them, but it's just one more piece of evidence to me that says, all right, this is probably going to be a low. All right, so we can look at that. Again, that's Caterpillar and XLI. Now let me show you something similar I'm looking at. I'm going to switch over to the tech sector, and this is a Nasdaq weekly chart. All right, and basically what we're doing, this is a beautiful trend, and I'm starting here from the bottom of 2023, excuse me. And so you can see here, I've labeled these larger wave counts, 1, 2, and then to me it looks like we're subdividing out. This means that Amazon has more upside. Okay, it's not in this crash mode yet. So if I zoom in here, you can see this is a 3, and now I've labeled this a 4. Again, important. This green line, I know is really hard to see, but this is the 38.2% retracement line. Okay, that's coming into the 55-week moving average. Okay, so we think about the 55-week moving average versus the 200 daily moving average. Okay, all these support levels are coming into play. You can see back down here in August, yeah, it traded a little bit below, but not for much longer. Okay, so again, it's an approximation. Doesn't mean it needs to be exact. All right, we can also see on this composite index, now there aren't any reversals just yet. It's close, but it's nearing oversold levels where before those were buying opportunities. Okay, so when I look at Amazon weekly, this is where I think things get really interesting, really exciting. This is the Nasdaq Composite Weekly Index. All right. So we looked at the positive reversals in the weekly Caterpillar. Okay. Now we can see it in the Nasdaq Composite Index. All right. So I'll walk you through it again. From this low, this is going back to September 6th. Okay. From this low, the Nasdaq made a higher high, or excuse me, a higher low, okay, on price. And we can see here that the composite index and the RSI made a lower low. This is a positive reversal. This is very, very important. This is an important bullish setup, okay? So if you think about the count in Amazon, and then we go to the weekly count, the overall index, not the Nasdaq 100, but the Nasdaq Composite Index, we can see that this is a very strong, and we get it in both technical indicators. We're getting in the RSI, we're getting it in the Composite Index. So to me, and again, I can't rule out more ups and downs, more trickery, more choppiness, if you will, heading into the end of this month. But so long as that September low isn't broken, I know that's a big spread. But again, this is where I go back to buying weakness and understanding that this is likely a correction that is taking a little bit of time to complete, but the risk to reward favors being long rather than being short here. All right. I also want to go back to, let's look at the NASDAQ 100 for a second. This is a cash index, okay? And what I want to show you here is look at this low, all right, that we just made this week relative to the low on the 13th, all right? Now, bear with me 1 second. This is the NASDAQ equal weighted average. So within the NASDAQ 100, there are, you have very specific, NVIDIA, Microsoft, Apple, those tend to weigh heavily in the index. If you do look at the equal weighted index, right, look at the low on January 13th here versus the low that we made this week. It didn't make a new low like the index did. So on an equal weighted basis, we're seeing positive divergence here. I think that's very important. So whether you look at things with whether it's the industrials, whether it's the Caterpillar, and then when we switch to the weekly Nasdaq, we look at the short-term setup in the Nasdaq. We look at the equal weighted versus the actual index. We look at the positive RSIs. We look at the positive composite index. We look at the wave fours. We looked at the Fibonacci retracements. We look at the 200-day moving averages, the 55-week moving averages. You can kind of see where I'm getting all this evidence that tells me that we are very, very close to seeing this correction end. Okay, so that's where my focus is on this week. Again, I'm buying weakness. I'm taking the other side of this fear, this sentiment. That whether you look at positioning, whether you look at the CNN Fear and Greed Index, this is something that I'm looking to take advantage of heading forward. All right. I'll cover one more chart and then I'll get you to some questions. Okay. We're going to keep this to around 30, 40 minutes, whatever it might be. All right. This is the Russell 2000. We made a trade here yesterday for 10 stock trader subscribers. All right. Let's go back. So look at the RSI here as it was this week. And this is the most oversold it's been in, call it 2 years. Okay. You can kind of see here, this looks like a corrective move, just a big ABC. Again, maybe we see another drop into the end of this week or early next week. That's fine. To me, that's telling me that we're setting up for a low to trade, and that's what I'm going to be doing for 10 stock trader subscribers. Okay, so big overview. I went kind of fast, but I think I presented the evidence, at least on a technical time or a technical perspective of everything that I'm looking for across all different sectors and stocks and time frames that we're looking for a low. Happy to take any questions now if there are any. Let's see what we got here. PE ratios are still the highest they have ever been. Seems silly to argue that the correction is over. So PE ratios, they can stay elevated longer than you think. And if anything, bull markets last longer than you think. Bear markets can last longer than you think. And this isn't something where it's like, we're going to go crazy max long and think that, this is going to go on forever. I'm not saying that. I'm saying I'm looking at this as a trading opportunity, over the next few months. It doesn't mean that we're not going to have more volatility, because if you go back to what we look at in the Nasdaq, or I'll just go to the S&P. Let's see here. Okay, if we think about the wave 4. Well, what comes after a wave 4? A wave 5, all right? And I'll get into some of the timing depending on with wave 4 when it ends, all right? And what that wave 5 would look like, okay? Then we get more volatility, all right? If anything, this correction reduces that PE ratio, okay? Especially with all this fear, and I want to buy that fear. That's something that I want to trade. That's something I want to take advantage of. How do you see natural gas futures up or down? That's a good question. I'll just say this with natural gas. It is the widow maker. It's something that I've seen. So I had a trader that I traded natural gas futures for a hedge fund that I work for called Campbell and Company. We traded huge size in it. I've seen people lose a lot of money trading natural gas. I stay away from it. It's not something that I will ever trade in 10 stock trader. I'll discuss it maybe, but it's not something that I'm going to look at or trade, simply because I've just seen so many people, again, I call it the widow maker, just get completely washed out. Someone even had a mental breakdown losing so much money trading natural gas. So it's just not something that I'm gonna focus on. But consider high inflation. Is natural gas go up and down? I mean, how much they produce, how much they import, export, what are the prices for those, depending on where you live. We saw that situation with Texas, when was that, last year, a couple years ago. Yeah. So there's just a lot of variables that you're dealing with natural gas, particularly when it comes to the weather. So it's just something that I kind of stay away from. What is a false breakout, false breakdown? That's a great question. And so this is, I'll go stick with the S&P here. A false breakout is, let's say you're right here, you're looking back from January, or excuse me, you're here in January and you have this high in December after the Fed kind of went crazy. All right, so you're like, all right, if I'm going to buy this, right, and it goes above that was the all-time high at the time, and then you can see what happened. It breaks down. All right, that was a false breakout. Same thing happened here in mid-February, right? You think it's going to break out, it doesn't. It's a false break. It's a false breakout. Same thing on the flip side. It's a false breakdown. You have this low here from January 13th. Okay, everyone starts to go short. Oh shit, support's breaking. You sell it. It's a false breakdown, and you rip higher. What is good software to use to start trading? If you have a broker, they should nowadays. Almost all of them have their own platforms. Just start there. And if you have any, if you're just trading stocks or not even trading at all, or just buying stocks for the long term, I would look into whatever software options they have available. They should be free. Most of them should be free. I use Bloomberg. I also have Optima. I also have Timing Solutions. I also you can use TradeStation. That personally, E-Trade. They're all relatively. You can have really good software with some of this free stuff. Is there any advice you give to your younger self, i.e., the market and trading? That's a great question. I think what I would tell my younger self is what I've learned really is that you can never give up, and you're always going to learn something new. So the second that you think that you've got it all figured out, the second that you think that you've got the market figured out, is when the market punches you in the face. You're going to be wrong. Okay, you got to get back up and you got to learn how to fight mentally. Okay. And I think that's a very important concept for trading and traders, younger traders, because they get so down. And it's like, or the flip side is, you have some people who are, smart, educated, well-read, whatever you want to call it, intelligent, okay, and they've been told that they're right their entire life, and then they get into the market and they hang on and hang on and hang on when the market is telling you that you're wrong, and that can crush people as well. So I would, and you're always trying to learn something new. I have my trading strategy, my 3 tenets of technical analysis, but I mentioned it to 10 Stock Trader subscribers earlier this year, and I'm going to be presenting something new in Las Vegas this year about a new Gann time factor index. I'm calling it the GTX for lack of a better term. This is something that I've been researching for years. I'm trying to put the whole thing together. I'm pushing myself to learn, pushing myself to grow, to never be satisfied with just what I've already done and what I already have gathered in terms of knowledge. I want more. So that's I think it's very important to again never give up and always understand that you have more to learn, especially when you're dealing with the market. Things change all the time, so you have to be able to adapt. How about consumer retail like Coke or Pepsi? Yeah, I mean, we can look at Coke. I don't, these are relatively stable. I mean, if you've been around Stansbury a while, they'll relatively stable. That's moving pretty good there. But yeah, so this is what I mean. So that to me, this is a 5-year chart of Coke. To me, this is just you're just going to want to own it. You're not really going to want to trade it. It's going to pay you a dividend. I believe I learned this from Stansbury in terms of long-term investing. It's like, all right, go back, take a stock. If it's been around for 20 years and it's paid dividends every year, especially during difficult times, 2000, 2007, 2008, then that's just a company you want to own. So that's kind of how I look at Coke and Pepsi. It's not something that I'm really going to trade. And again, this is pretty. I'm not saying you can't trade it. It's just I'm more focused on other things to trade. Do you see a setup for Snowflake? This isn't something that I've looked at. Yeah, see, this is a mess. Okay, To me, this kind of reminds me of like Square. Kind of reminds me of ARK, the ETF, Kathy Wood. I'm not picking on her. I'm just saying, like, just the chart is, to me, is just broken. You have these gaps down, you have these, gaps up. There's no real. I mean, the long term trend is down, but you have these huge moves. So that's something that I personally would stay away from. Would you wait for the stocks to reclaim their short-term moving averages before taking a new trade, or are you taking contra trading positions right now? That's a good question. So I kind of outlined this in the first episode. How aggressive or how conservative do you want to be? And this is where I think Elliott Wave, understanding Elliott Wave, and you can combine them with the moving averages for sure. How aggressive do you want to be? How conservative do you want to be? What I mean is, do you want to have the market take you in and out, or do you want to get aggressive and buy bottoms and sell tops? Okay, so in this case, would I wait for stocks to reclaim their moving averages? Not necessarily, okay, because I'm using what I like to have as the a fifth wave down. We looked at that here. Let me show you this. We look at this with the Nasdaq. Okay, this is where I'm going to get aggressive if I see this wave 5 down. Okay, and then it actually, if we look at the S&P 500, here, let me go back to this. Let me show you on the S&P, because that'll be easier to explain. All right, so if we're thinking about the 200-day moving average on the daily chart, okay, and it drops below the 200-day moving average, but it's still within this wave 4, we get into an oversold level. This is where I would get aggressive, but it hasn't reclaimed the daily moving averages, to answer your question. So that's where I would get aggressive. Now, if you wanted to wait to make sure that this wave 5 is confirmed first, and then you start buying this breakout, there's nothing wrong with that either. And in fact, this is where I would say, okay, look, we got aggressive, and then where will we add to our position? What we can add is when we see this breakout. Let's see. What about ETHU? I'm not sure I know what that is. Oh, Ether. So this is I'm guessing this is ETF, Ethereum ETF. I mean, this is where you have divergence between, like, if you look at Bitcoin versus IBIT or BITO. Okay, we have these divergences where we have this making a new low, but Ethereum isn't, or Bitcoin rallying and BITO isn't. These ETFs are kind of tricky. I've traded BITO in the past with some success, some not. This is oversold. This is oversold. I can't give specific advice. That would be something obviously to watch. But the actual price action of this versus the underlying. So here's Ethereum. Is different. All right, this one actually tracks pretty well. So maybe that is something to look at, in terms of a low being formed. And then the other thing too is, cryptocurrencies, Bitcoin, all this other stuff. Obviously, a lot of news about it lately. I just, and this might upset some people, but I just look at it as another market to trade. I don't look at it in terms of, the supply versus demand. It's going to be a new currency. It's going to solve all of our problems. If it does, great. I'm here for it. But I just look at it as another market. How about GDX? So GDX, actually, was it 2019, 2020? These were the best trades in the history of 10 stock trader in terms of volatility. What's been happening with GDX relative to gold miners versus the underlying, and then when we take in silver and the silver miners, it's just been a mess. Now, obviously you could have traded gold, you could trade all this stuff, okay? But as a technical trader, I like to see confirmation. I went over that to start with all the different sectors and things. So I like to look for confirmation, and when I don't see it, it kind of makes me wait, be a little bit patient. So if we look at a max chart of GDX here, and I was looking at this last week, all right, you can see if you were to just look at this and say, well, GDX hasn't broken out above the August 2020 highs. What's gold doing? You would probably, just based on historical correlations, think, well, gold's not either. But gold is rallying to new highs. Silver's not doing that either. So, is this something where we see GDX finally start to break out? It's definitely high on my radar, but I'm not doing much with that right now. XLF, can you speak to its future? I can speak to what it's doing now. Let's look at, and this is also something that I think is important because you always need to watch the banks, okay? And the banks have been really one of the best performing asset classes over the last few years, which is a good sign for the economy. We had this high on Monday, okay, and now we're trading lower. So how does this play into what we looked at the entire show with the Dow, the Nasdaq, the S&P? I think financials are going to give us a glimpse into how everything else plays out heading into March and then heading into the summer months. That 4 to 5 swing setup. So right now, this isn't something. I'm not trading financials. I'm watching them. And if we see financials bottom, whether it's again this week or sometime next week, or whether in late March, that would also give me the go-to that, okay, everything else is probably going to bottom as well. Okay, I think we have wrapped up. Okay, again, exciting volatility happening. I think we're close to this corrective move being over. So thank you for joining in, and I will see you next week. Thank you.